Welcome to the Teachers Retirement Association of Minnesota's Planning for Retirement presentation. Here are some ways you can connect with TRA. Our chat feature on our website, the My Messages function in your online account, and calling us are all considered secure ways to connect with us. We will always verify your identity before sharing personal information. This is an outline of our presentation today. We will review how your pension benefit is calculated and go over the 3 decisions that you'll need to make when it's time to retire. We'll talk about a combined service annuity and survivor and disability benefits. We'll look at creating an estimate and applying for your benefit. Your TRA pension is a defined benefit plan. That means it is a lifetime benefit for you. Contributions are made by you and your employer, and participation is mandatory. Investments are managed by the State Board of Investments. While you are working, you are contributing 7.75% of your salary, and your employer is contributing 8.75%. Employee contributions are scheduled to increase by 0.25% effective fiscal year 2025. Employer contributions will also increase by 0.75%. When you are retired, you will receive a monthly lifetime benefit. Our pension buck here shows where the benefits paid out come from. 73% on every dollar comes from investment earnings throughout your career. 14% on every dollar paid out comes from what your employer paid in, and 13% is you getting back what you pay in from every paycheck. However, your pension will not be based on these contributions or on an account value. Remember, you continue receiving the benefit for your lifetime in retirement, even if that goes beyond the total that you contributed. On May 24th, 2023, the governor signed the Tax Finance and Policy Bill. Effective July 1st, 2025, the normal retirement age reduces from 66 to 65 for Tier 2 members. The employer contribution rate increases by 0.75% for a total rate of 9.5%. And the employee contribution rate increases by 0.25% for a total rate of 8%. The Pension Omnibus Budget Bill was also passed. It provides a total of $176 million in direct funding to TRA. $31.1 million will fund a one-time lump sum payment for retirees in January of 2024. The remaining $145 million will help reduce TRA's unfunded liability. As you plan your retirement, you begin building the blocks of income that you may have. To see what your TRA benefit will be at retirement, you can run estimates in your online account. The average Social Security benefit is $1,782 according to their website. You may also have other income sources or medical saving sources. TRA does not have information on your whole financial picture and does not offer insurance. Please check with your employer with any questions you may have about insurance. Now we'll look into the calculation of your TRA benefit. It is based on this formula. As we look at the formula, remember that you do not need to calculate your own pension benefit. The calculations are available to you in your online account, and we'll look more closely at that process shortly. First, we look at a multiplier. We use a multiplier of 1.9% for each year after 2006, and a multiplier of 1.7% for each year prior to 2006. Next, we look at service credit. For K through 12 educators, your service credit is calculated based on the annual base salary in your district. If you work in all the contracted months of the school year and earn at least the annual base salary in your district, you will receive 1 year of service credit. For Minnesota State colleges and universities, this is based on a percent of FTE, and you may not earn more than 1 year of service credit in 1 year. Next, we multiply that times your high 5 salary. The high 5 is the average of the highest 5 successive years of salary. In other words, the 5 years in a row that gives us the highest average. Finally, we multiply all of that by a reduction factor if applicable for your age. Currently, the normal retirement age at TRA is 66. Early retirement can start as early as age 55. Starting your pension before age 66 reduces the benefit. Those members who are at least 62 years of age and have at least 30 years of service qualify for a lower set of reductions. Now we see how that formula works out. At age 55, with 23 years of service credit and a high five of $50,000, you would have a benefit of $758. If you work 7 more years, so now you are age 62 and have 30 years of service credit, remember those are the milestones mentioned earlier, there is less of a reduction for early retirement. With a high five at $55,000 now, your benefit would be $2,222. Finally, if you work all the way to age 66 and your high five, it goes up a little bit more to $60,000, your benefit also goes up to $3,230. Remember, this is just an example. This slide reminds you to check your own estimates at different ages. There are other factors that can impact your pension benefit amount, such as leaves of absence. By taking a leave, you might forfeit service credit because you did not earn salary or pay into TRA. Purchasing service credit for the time you were on a leave can increase your eventual retirement benefit. If you have a leave coming up, you'll need to decide whether you want to purchase the time you are on the leave. The following leaves are purchasable: medical, family, military, union, sabbatical, extended, and parental. Leaves coded as other are granted for reasons other than those mentioned above and are not purchasable. All leaves must be approved by your district. To learn more about leaves, please visit our video library at minnesotatra.org. If you are an active member of TRA, you can purchase up to 5 years of service performed as a pre-K through 12 teacher or administrator in a public or charter school in another state. To purchase, you must have at least 3 years of TRA allowable service credit, provide TRA with validation that the service occurred, have forfeited all rights to benefits for that same period of out-of-state employment, pay the full actuarial cost, and repay in full all refunds to be reinstated with any Minnesota defined benefit public pension plan. Another factor that can impact your pension benefit is refunds. If you have taken a refund of your TRA account in the past, this service would not be used in calculating your benefit. Repaying the refund and the interest that has accrued would restore that service credit. In order to repay a refund, you must return to work and accumulate at least 2 years of allowable service credit with TRA or another Minnesota public pension fund. You have the option to pay back a refund, but it must be paid in one lump sum at one time. You may use personal savings or rollover money from a qualified retirement plan. If you choose to repay a refund, it must be paid before your retirement benefit effective date. Here is a sample estimate. There are 3 big decisions you make when you choose to retire. The first decision is when to take your pension. In this example, we have projected a date of retirement of June 16th of 2025. You will likely want to run scenarios for different dates to help you decide when to retire. Watching the video, How to Read an Estimate, on our website can be helpful when understanding the 3 decisions you make when you choose to retire. The second decision you'll make is which plan to select. All 6 plans pay you for your lifetime. The difference is what goes to a beneficiary. The no refund is the highest paying plan. It pays you the amount listed for your lifetime, but nothing passes to a beneficiary with one exception. If you happen to pass away within the first 2 months of receiving your pension, the balance of your account will be paid in a lump sum to your beneficiary. The guaranteed refund pays you the amount listed for your lifetime. If you happen to pass away before we have paid out your account balance, we will pay your beneficiary the same monthly amount until we've paid out your account value. It typically takes us 2 to 6 years to pay out your account value. The 15-year guaranteed plan pays you the amount listed for your lifetime. With this plan, if you pass away in 10 years, 5 more years of payment would go to a beneficiary. If you pass away in 16 or more years, nothing passes on to a beneficiary. The 3 survivorship plans allow a survivor you name to receive 50, 75, or 100% of the amount you receive for their lifetime if you pass away first. If your survivor passes away first, TRA will bounce you back up to the higher no refund amount for the remainder of your lifetime. For more on these plans, watch our 6 plans video available in our video library. Finally, the third decision you'll make is whether to accelerate or not. Accelerating means taking more of your pension earlier and then dropping to a lower amount when you turn a certain age. You can accelerate to age 62, 65, or your normal retirement age with Social Security. For more on acceleration, watch our video available in our video library. Next, this estimate reflects the impact of reaching the 62 and 30 milestones. The benefit amounts are higher once there is less of a reduction for meeting both milestones, age 62 and 30. The no refund amount has grown from $12.42 at age 60 to $19.67 at age 62. Here we see a brief recap of how the plans work. This chart is available on our website and shows the 6 plan options with TRA and the beneficiary coverage of each. If you have service with another Minnesota pension fund such as PARA, MSRS, or St. Paul Teachers, you might be eligible for a combined service annuity payment if you have at least 6 months of service with each plan in which you are a member. Combined service might help you meet vesting requirements, maximize your high-5 salary, and reach milestones like 62 and 30 years of service. And you may receive a higher benefit payment overall because of your combined service. If eligible for a combined service payment, you'll need to request separate estimates from each fund and apply to each fund separately. You will receive a pension payment from each fund. And again, we do work together and use each other's numbers for vesting totals, finding the highest 5 years of successive salary, and to meet milestones like 62 and 30. We know life happens. Please keep TRA in mind should any of these major life events occur. Be sure to keep your beneficiary information up to date. If you are unsure who you have listed as your pre-retirement beneficiary, contact TRA to find out. We can get you the necessary form to update your beneficiary if need be. What happens if something happens to you while you're still working? TRA provides pre-retirement beneficiary benefits. If you're married and you die while you're still working, your spouse has an option of a lump sum, 5, 10, 15, 20-year, or lifetime annuity. Your spouse can waive that right and allow the children to receive a lifetime benefit. Single members have other options including lump sum benefit, dependent children survivor benefit, and lifetime annuity benefit, depending on the situation. There are different forms for single and married members. TRA also offers disability benefits. Disability at TRA is defined as a total and permanent disability, and you are unable to engage in any substantial gainful activity for at least a year. This is not an occupational disability. In other words, you must be unable to work at all, not just unable to work as a teacher. Please contact TRA if you need more information about disability benefits. And there is a detailed video about our disability program in our video library. This is what the homepage of your online MyTRA personal account will look like. You can do many things in your own account. You can view salary, service credit, and employer history. You can apply for disability or retirement, run estimates for yourself, or make an appointment. In your settings, please be sure to keep your information up to date. If you need assistance online, please contact us. In your account, there will be an envelope icon next to your name. You can send messages securely through this portal, and a retirement counselor can respond with information and documents regarding your personal data. Let's take a look at creating a retirement estimate. You will first enter your last day of work. Next, enter your benefit effective date, which is the day after your last day of work. If you don't want to collect right away, you can choose a date in the future. This is called deferring. Now you either enter the dates or choose an option from the drop-down box, such as normal retirement age, earliest retirement date, etc. Next, enter your beneficiary's date of birth and relationship to you. If you would like to enter more than one beneficiary, please enter the youngest age. Once all required information has been entered and saved, you will see a chart like this one outlining your benefits. For more detail, please watch our video, Creating an Estimate. This timeline can be helpful in understanding the retirement process. The blue line in the middle is the last day that you do work. You may submit your application online or on paper 6 months or precisely 180 days prior to your last day of work. It will take us 3 to 4 months to process your application, so you will want to get your application in at least 3 to 4 months prior to your last day of work if you want to get your first payment on July 1st. You have a 2-month window from your first payment to make changes such as the plan chosen, beneficiary chosen, acceleration, etc. Once the third payment is processed, you cannot make any changes. For more on the timeline, watch Steps to Retire in our video library. You can complete your application online or use paper forms. The list shows the items that you'll complete when filling out your application. We will send an acknowledgement letter a few weeks after we receive your application, listing out any items we still need, such as spouse acknowledgement signature, employer verification of last day of employment, spouse signature on a waiver if not choosing a survivorship plan, proof of age, and divorce decree if applicable. Items you may change at any time during retirement include direct deposit information, tax withholding information, and address changes. You can also download your 1099-R tax forms from your online account. TRA does provide post-retirement increases each January. It is currently at 1% and will be increasing over the next several years to 1.5%. These increases are subject to change by the state legislature. If you go back to work in a TRA-covered position and you are under your normal Social Security age, you are subject to a $46,000 a year earnings limitation without impact to your pension. The earnings limitation has been suspended through June 30th of 2024. Remember the ways of contacting us securely about your benefit information. Visit minnesotra.tra.org. Our website has a lot of great information. Our video library is housed there, and you can also live chat with a counselor. If you have an online account set up on your website, you can communicate with us via the My Messages function, or simply give us a call at 800-657-3669 to chat with one of our phone counselors. Our hours are Monday through Friday, 7:30 to 4:30. We also send out our TRIB newsletter 3 times a year with important information you need to know. This brings us to the end of our presentation today. Thank you for joining us.